All right, guys. Welcome back to the YouTube channel. It has been an awesome moment, and it's been a while. I really upload trading tutorials right on the channel. So in today's video, I want to bring us a very quick and simple strategy that you can use to trade the market, right? So, and like I said, it's very simple, right? Please, if you are new to the YouTube channel, I want to say a very big thank you for stopping by. Please subscribe to the YouTube channel if you love this kind of content, and also hit the notification bell so that whenever I drop a video, you will be notified, right? And to the returning subscribers, I want to say a very big thank you for always coming back, right? So like I said, this strategy is very simple and straightforward, right? You don't need to complicate things. First thing you need to understand is market structure, right? You need to understand market structure. I was doing a video um, before on top-down analysis. I was doing a series of top-down analysis. I'm going to continue that, right? I'm going to definitely continue that. I've also integrated traveling into my schedule, right? So, but I'll try as much as possible to continue because I've been getting a lot of requests from people, from subscribers, that I should continue the series. So trust me, I'm going to continue the series. But this is a very simple strategy you can use to make money for yourself in the market, right? All right. So okay, real quick, let me brush over market structure. We all understand market structure. When market makes series of higher highs, higher highs, like that, right? And then we have on that series of, let me use this two, of lower low, lower high, lower low, lower high, lower low, right? So that is market structure, right? When market makes series of higher high, higher low, higher high, higher low, higher high. And then we know every swing point, right, to be our support and resistance level, right? Our support and resistance level. So when market is on an uptrend, like higher high, higher low, and then it break the previous high, we anticipate market to come back to retest that previous high that was broken right before going up, right? So and then let's say the same thing with the flip side. This market breaks, like coming down, like a downtrend market, lower low, lower high, lower low, lower high to this region, right? To this region, and then before we anticipate the drop, right? Another leg of the market, of the structure, right? So this is it, guys. So that's basically an overview, a gleaning of market structure. All right. So I just give us a gleaning, but I'll do a very deep, comprehensive video on a market structure in a few days, on a subsequent time to come. Right, so it's very simple. Right now, I'm on. This is Euro US dollar on the 4-hour time frame, right? And then if you look at this market, it has been printing series of uptrend from this side, right? Look at it here. Market printed higher high, higher low, higher high, higher low, higher high, like that before this massive pullback to this side, right? So now I want to show us how we could have caught this move, right? This move here, like this, right? And then now you could have also caught this move as well, like this move as well, right? From this high, from this swing high to this low, and then you also caught this high, right? Real quick, right? So now, like I said, every swing point of the market is your support and resistance level. At this point, we have this market going higher high, higher low, broke this high here, right? So here will be our resistance level, right? Resistance, I can also call it demand level, right? And then here is also another swing point, right? Another swing point, making it a supply level, right? Which is our resistance level. Here's our support level. Sorry, here's our support level. Here's our resistance level already. All right, so understanding that every swing point of the market is either your support level or your resistance level, depending on where you're looking the market from, right? If you're looking at it from the high, right, it's your resistance level. If you're looking at it from the low, it's your support level, right? You can also call it your support. You can also call the high a supply level and the low a demand level. So real quick, right? So let's go. So let's imagine this market. This market was trending like this. Let me see if my subscription, if I'm still having if I'm still subscribed to trading view premium, I think it's in expired. Let me check. Right, okay, let's see, let's clear stuff and see. Oh no, it has expired. It has expired, guys. All right, so let's just look at it manually. Right now, let's say the markets here, right? Market was here like this, and then a pullback. That is lower high, right? Before this lower, sorry, a higher low, right? Before this higher high here, right? So what you expected to do, right, when the market was printing this lower high, right, is to draw a demand line there, right? To draw a line there at that high, right? Expecting market to break this level and come back to retest it. Now, most of the time, I know most people know this strategy, but most of the time, whenever you take a trade, you easily get stopped out by this, right? You usually get stopped out by maybe a week before the market goes to your direction, right? Goes to your direction. Let's say this here, right? Most of the time, this week normally take you out before going to direction. Now, I'm going to show you a way to um to avoid that, not avoid it totally, because you understand you can't predict the market 100%, but at least to an extent it will help you, it will help your trade not to be stopped out, right? Most of the time. Now remember, you draw this, let me make this line bolder, right? Let me take it. All right, you draw this demand line, right? And then when expecting price to come in, now there's an indicator I use, right, to help me know when to get into the market, and it is called the awesome oscillator, right? The awesome oscillator, I use it for divergence. Now if you don't know what divergence is, right, divergence is when, for example, let's say the chart is printing series of lower low, lower high, lower low, lower high, lower low, but your indicator is printing series of higher high, higher low, higher high. Now you start seeing the charts, right? The charts coming down while your indicator is going up. Now there will be a disagreement between those the two, right? Between your chart and your indicator, right? So what I'll now do is bring on my awesome oscillator. You go to your indicator tool and then set up your awesome oscillator, right? I have it on my chart already. So now once you look at this place, right, when price was coming back to retest this level, right? When price was coming back to retest this level. Now this is not macro, right? I know I'm big on macro, right? This is just pure technical, right? I will do a video as well on macro, on macro, so you can be able to apply fundamental analysis to your chart. But this is just pure technical, right? There's no way you can trade the macro without technical. There's no way you can trade it, and although you can trade technical to get macro, right? But in as much as you know macro, you still need technical for your entry. All right, so let's go. But you can still decide not to trade the macro, not to trade the news, just trade your pure technical. You can still be profitable with it. All right, now looking at this, right? When price was coming down, right? Coming down like this, right? You can see it coming down. It came here. Now most people would have entered as the price was trying to go back. Let me zoom that in. Right, most people would have tried to enter at this point. All right, let me zoom it. Right, most people are trying to enter at this point because, yes, of course, price have retested here. Price have retested this level. Let me take this indicator off first, right? Price have retested this level, right? And then you can see price pulling up already, like going up aggressively. But people get stopped out by this drop before this massive pull up, right? But with the help of this indicator, you actually know when to get in. Right now, look at price. When price gets to that point, right, you can see that our indicator also gets to this, as in is low, right? The momentum is low, but we want to see a divergence, a disagreement between the chart and the indicator and the awesome oscillator. Now, looking at this, you can see that when price gets to this level, right, coming down to this level, printing series of lower high, lower low, right? You can see, look at this indicator carefully. It's printing series of higher high, higher low, right? Higher high, higher low. You can see that, right? You can see this high here. Sorry, this low. Where's my tool? Okay, you can see that this low, right? This low is lower. This low is lower, right? But this low here went lower, but the second leg of this went higher. Now there's a disagreement between the two. right? It's a disagreement between the two, which means it is time for you to not get in. So when price happened, when this happened, right, you want to not get in at the first bullish candle, right? At the first bullish candle, right? At the first bullish candle. Now, if you want to take this trade now, you'd have entered from this place, right? Or where's my long position? You have to take this trade from this first bullish candle here, and then with your stop loss below this point. Now, not as if you won't get stepped out, as in not as if you won't get stopped out. Now, this is not a 100% win strategy, right? But most of the time, like let me say 6 out of 10 trade, right, it will work for you fine, right? No, but if you're looking for 10 out of 10, then trust me, I'm not sure you can get that. All right, you cannot get 100% strategy. Now your target will be at this above, right? Now this is like 1 to 5, right? 1:5. So we would have gotten in at this point and then take profit at the high here, right? So you can see how that works, right? So applying divergence on the chart, right, gives you at a support or resistance level, gives you a very, 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 very strong edge over the market. Now let's move on. Now when the market went higher, now this is a swing point, right? This is a swing point. Now if you look at this carefully, when price got to this side, right, when price got here, look at this, when price got here, looking at your divergence, right, you could see that when the market, where is my brush to, right, when the market got here, the chart was printing higher high, higher low, higher high. But look at the awesome oscillator, right? The indicator printing high, right, and then low. Look at that. So once you see, you can see that this high here, this how will I put it? This high here, the market printed a bearish momentum and then for the bullish momentum, but the indicator, awesome oscillator, the divergence was going down, the volume was going down. Right, looking at this, this was going up. Now it's a sign that the market wants to reverse, right? It's a sign that the market wants to reverse. Now, where did that happen, right? Because that, although this low here was lower, I know most of us, when I took the trade, actually I got in here, right, but I was stopped out. That's what I was saying, like you can't get 100%, right? I was stopped out. So you can see that short position, the first bearish candle, because this low here, this market that printed low, and then it is higher than this high here. So at first I got stopped at here, right? I got stopped at here because I think my stop loss was around here, and then I was targeting this particular low here, right? This low I got stopped at first, right? And then at the same time I've tried to enter here again, right? I got stopped at the second time. Now, this is what I was actually saying, that most of the time, not as if you don't get stopped out, you get stopped out, but providing you are playing a game of, the game of risk to reward, on the long run, you'll still be profitable. Now, to the final stage where I got in here, right? When I got in here, and I think my stop loss was both this high here, this particular high here. So I put my stop loss here, right? Like, I trade only Euro USD, not of recent that I added US oil, right? And then my take profit was around somewhere here, right? And then the market dropped drastically, right? Dropped drastically. Now let's look at this. When price got to this level, this low here, remember we said at every support resistance level, you want to look for divergence, right? When price got to this level, right, to this particular level here, sorry, to this particular level here, right, you could see that when price got here, looking at the divergence again, right, look at the divergence again. When price goes to this demand level, which is the support level, right, you could see how it plays out again, right? You could see that this place was in that here, the price was trying to push down, but the volume here was trying to go up, right? Was going up, sorry. You can see that the volume was going up, so there was a divergence there. Remember, after the second leg of the divergence, I looked for the next bullish candle for a buy. For a sell, I was looking for a bearish candle here, right? So once you see that, you want to take a long position after the divergence. So I got in here, right, with a stop loss below the side, right, and then targeting, my target is here, right, although I've not taken profit, right? Okay, so this is like 1 to 6, right? So I'm not taking profit. The market is still dancing around, right? And then because I can see a demand level around here. I can see that sorry, I see demand resistant level, a supply level around this side. So that was why I put my stop loss there, my take profit there, right? So you want to look at every demand and supply level if there's a divergence. Now, like I say, you won't get 100% win rate strategy, but at least this will help on the long run. So, guys, that is it for this video. If this interests you, like I say, please subscribe to the YouTube channel, right? Also, hit the notification bell so that whenever I drop a video, you'll be notified. Also, drop your comment, right, in the comment box. I will try as much as possible to respond to the comment, to your question, right? So, guys, see you in the next video. Peace out.